Firstly, welcome to all those participants that have joined us, whether it's morning, afternoon, or evening for you, depending on where you are. This is a long expected session, which will both prevent the framing report of the Digital Finance Task Force that the UN Secretary General launched in November 2018, and also dive into the specific topic of how best to advance effective governance of global digital finance, or BigFintech, in the context of the broader SDG agenda. We have a number of people still joining us, including Achim Steiner from UNDP and Patrick Njoroge, Central Bank Governor of Kenya, who have just been overseeing a roundtable focused on exactly that subject. So we will have comments hot off the press, I hope, as we move forward. Broadly, our run of show today is as follows. We're going to have an opening set of comments from Ambassador Christian Frütiger, who's the Assistant DG, Head of Cooperation at the Swiss Development Agency based in Bern. Then Achim Steiner, both the co-chair of the Digital Finance Task Force and the administrator of UNDP, will make some comments, followed by Ita Manatoka, an executive director on behalf of Africa Group 1 for the IMF, will also add in some remarks. We'll then move on to a panel discussion, and after that we'll hear from Patrick Njoroge, who both has sat on the Digital Finance Task Force and is also co-chair with Achim Steiner of the Dialogue on Global Digital Finance, the topic of, if you like, big fintech governance writ wide. We will hopefully get through that in the next 90 minutes. So without further ado, I would suggest that we kick off. The ambassador, unfortunately, can't be available live, but has offered a very lively video. And so I'd ask my colleagues now to let that run.
Excellencies, ladies and gentlemen, let me very warmly welcome you to this virtual event here in Geneva and share with you a few thoughts for this important occasion. The digitalization of finance has been a game changer on how finance works globally. In terms of development outcomes in particular, the difference made by fintech in dealing with the socioeconomic crisis stemming from the COVID-19 pandemic has been truly impressive. For example, algorithmic lending to extend loans to SMEs on a large scale in developing countries has been amazing. I would like to congratulate the Task Force on Digital Financing for the SDGs, established by Secretary General Antonio Guterres, for showing new ways of harnessing digitalization in order to recover from this crisis and to support sustainable development. The Task Force also pointed out trends and issues that need to be carefully addressed. Indeed, digitalization is driving the emergence of new global players, big fintech, who are quickly becoming the giants of tomorrow's financial system. Fintechs also increasingly impact areas of sustainable development, particularly in low and middle-income countries. Global e-commerce platforms, for example, can dramatically affect hundreds of thousands of small, medium-sized enterprises and millions of people anywhere in the world.
This raises very quickly a number of key questions regarding privacy, potential exclusion of women and minorities, as well as other important issues that can occur through algorithmic biases. The difficulty is that current governance models are not capturing the broader impact fintechs have on sustainable development, and are not inclusive of the voices coming from the South. The task force therefore recommended to facilitate a balanced, more inclusive dialogue, particularly involving low and middle income countries, on SDG-aligned governance. This is why Switzerland and Kenya are today particularly happy to host this platform for dialogue on global digital finance governance. Switzerland, as a global financial center with a long tradition and expertise and high quality standards in the field of sustainable finance, is well placed for this undertaking. Through multilateral and international cooperation, we have always been proponents of an inclusive decision making. And Geneva is a major hub for digital governance, with the follow-up on the high-level panel on digital cooperation and through initiatives such as the Geneva Internet Platform. I'm sure that this dialogue will advance consensus on policy responses for global digital finance governance that are appropriate for developing contexts. It will help unlock the full potential of the fintech sector towards the realization of the 2030 agenda. The dialogue will convene representatives from central banks, finance, trade, other important ministries, cross-sectoral regulatory bodies, and non-state actors from developing countries, as well as representatives from key institutions such as the Financial Stability Board, the IMF, the World Bank, and the G20, just to name a few of them. It will also work on a new geometry of actors to ensure no one is left behind. I am convinced that this dialogue will bring digital finance forward to benefit both the global north and the global south. And I'm proud that together with our partners, we are, as of today, accelerating this important endeavor. Thank you very much.
Thanks very much to Ambassador Frutiger. Apologies for the slight sound problems. It does occasionally happen in the world that we inhabit now. Hopefully his main messages came across loud and strong, and I'm sure will be reinforced by our following speakers and also the panel. Secondly, then, I'd like to invite Achim Steiner to take the floor. Achim perhaps has three different hats on: co-chair of the Secretary General's Digital Finance Task Force, co-chair along with Patrick and Njoroge of the Dialogue on Digital Global Finance, and also obviously his day job, which is administrator for UNDP. Achim, the floor is yours.
Thank you, Simon. I was beginning to get worried with that introduction. There's a lot of sitting on chairs that you're implying, but in fact, what I want to do, and colleagues, excellencies, and also to Ambassador Frutiger, thank you for those introductory remarks. The presentation today really is one in which I hope you will feel both the excitement, but also the vibrancy of this task force and its report. I just pulled it out again, People's Money. It's a perhaps slightly strange report when you look at digital finance and the SDGs. That was a little bit the subtitle. And the mandate of the Secretary General at the time was, as part of his wanting the UN to also understand what does the whole digitalization imply for sustainable development goals, for development writ large across the world, not just in developing countries, but really in every society, in every economy. And I think it is fair to say that we were fortunate in assembling an extraordinary and exceptional group of people that came from the public regulatory domain, the private sector, the technology and finance sectors, but also real entrepreneurs who are at the forefront. One of them, Natalie, is in fact with us here, of trying to explore how you develop something that technology enables you to do, that regulation had no idea it was already possible, and that people just started using. And I think one of the interesting findings of this task force is that when you look at digitalization and digital finance, fintech, it is already ubiquitous in the sense of a global presence. It is transforming the opportunities for hundreds of millions, in fact, billions of people. And we still often, particularly in the public policy arena, transact discussions as if we are operating in a hypothetical environment. And I think if there's one big lesson that I took away from the task force is that this is an exponentially accelerating transformation. It is a revolution in technology and finance, but ultimately it will change the future of development. I lead the United Nations Development Program, and therefore understanding the implications of what is possible but also to learn from history and the lessons that technology-led transformation alone does not necessarily produce optimal outcomes. How do you incentivize? How do you regulate? How do you protect fundamental rights? Because one of the interesting things that Jack Ma and the other members of the Digital Cooperation Panel that the Secretary General had launched a year before was also to say that it is intriguing and to some extent disturbing that things that we have spent decades establishing, fundamental human rights in the analog world, simply cease to be considered relevant in the digital world. And I think we've all found ourselves trying to understand what is right about this and what is wrong, but also not to simply try and transport the past into the future, because that is irrelevant to a world that is rapidly digitalizing and is becoming digitized in the way it operates. Indeed, in the panel that we just were in before, where we looked at BigFintech, there is quite clearly a major phenomenon where we might discuss globalization on the retreat right now, but the opposite is actually true when you look at the world of BigFintech and of digital finance. It is advancing and driving globalization in ways that we have never really seen in history. So the report, People's Money, set out to understand what is actually happening right now, how fundamental, how cerebral is it to the way that our economies as macro entities, but also how our economies in terms of citizens' economies would evolve in this world, and how we would shape the outcomes that ultimately we all agree will underpin successful societies or failing societies. And clearly, inclusion emerged as a fundamental variable here. Indeed, the UNDP Human Development Report of 2019 identified climate change and digitalization as the two key variables that will define how development will succeed or fail in the coming decades. And I think everything that we found in the work of the task force was both a mixture of excitement, of being intrigued by the possibilities and already the examples that are unfolding. Imagine a pension holder with an app that is able to basically look every day at how his or her pensions are being invested. The way that we have been disintermediated as citizens from our own money, that's why the report said, people's money, the taxes we pay, the pensions we save up, the savings we have, the money we expend. It is not the institutions who own that money, it is citizens all over the world ultimately, have, however, found themselves increasingly separated from what money actually causes in a positive or a negative sense. So pensioners can be reconnected, savers can interact with their savings institutions, a government can mobilize millions of micro savers in order to raise bonds to finance major national development infrastructure, and not necessarily have to go to international capital markets, where Kenya today, just to give you an example, and Patrick, please correct me if the numbers are no longer accurate, a one-year bond raised by Kenya on the international financial market costs well above 7.5% of interest rate. If you're called the United States and you borrow today for 1 year, you pay roughly 0.17%, 64 times the cost of borrowing simply by being two different countries. Now, there is a great deal of financial rationale in there, but trying to also look at domestic savings, domestic finance, the capacity of millions of micro savers being able to aggregate is another example. Cooperatives that can offer immediate financing, short-term loans combined with climate risk insurance, all of this transacted on a smartphone platform, being able to bring hundreds of millions of people into a financial system that largely excluded most of them because they had no address, no bank account, no credit rating, and simply didn't exist in that world. So the task force, and I'll end with that, has obviously tried to not predict the future or even try to foresee it. However, what it has tried to do is to recognize the significance and magnitude of fintech, of digital finance, and try and put it in relation to the Sustainable Development Goals, the universally adopted agenda of the 17 things that are both the greatest risks we may face, but also the goals we have set ourselves for the future of sustainable development. And here we see extraordinary opportunities. They are to be shaped as an ecosystem, as a market. They may have to do with foundational pieces such as simply connectivity, fiber optic cable, India's proposal to connect 450,000 villages in the next 1,000 days in the midst of this pandemic is a reminder also that while we already foresaw with the task force extraordinary pace and speed and change, COVID-19 has added another accelerator here. We are literally in the midst of a phase in which the realm of possibility has shifted enormously. The future of 5 years ago has simply been brought forward, and regulators, citizens, financial institutions, startups, the financial markets have to quickly learn how to work together in shaping that world that will define for virtually most of the world's citizens, probably in the next 5 years, their existence in a global financial system that can either leave them behind, make the world more unequal, or in fact leverage digital finance, fintech, and all that comes with it as perhaps the greatest accelerator in closing that gaping wound of the 20th century that has left too many people behind. With that, Simon, I hand back to you because I know there are far more competent speakers also on the substance of the report, but I wanted to share with you my excitement simply because of the way the task force was able to capture, express, and envisage the arena within which we are all called upon to rethink what happens next. Thank you.
That's fantastic, Achim. Thank you very much. And you were perhaps overly modest in failing to point out that UNDP, which, as we all know, is one of, if not the world's largest sustainable development organization, is driving some of the recommendations from the task force into its operational work across the 170 countries in which UNDP and other parts of the UN development system is active. So certainly kind of a huge amount of work moving from great ideas and good thinking down into practice on the ground. Much appreciated. Let me move on to our next keynote speaker, Ita Manatoka, a long title, First Alternative Executive Director of Africa Group 1 of the IMF. I think, Ita, it would be reasonable to say that you're from Botswana and that you help to hold the IMF to account for the way in which it impacts and works around Africa development, but you may want to frame it in a different way. We look forward very much to your comments.
Thank you, Simon. Yes, I think I'll speak though mainly just to give a sense of the African experience. For the continent, we do find that fintech is really, it's spreading everywhere on the continent. It's in the financial sector services, as we know. It's in the commercial sector now as well, where big fintechs are increasingly involved, and it's in government operations and services, as well as in policy. And given its implications for the financial stability, it's also in monetary and its implications for monetary and financial systems. It's also being looked at in policy and regulation. So this whole discussion and debate is a critical one for developing countries, including the African region. On the African continent, really right now, one of the key challenges has to do with the sort of the intersection of demographics and access to effective mobile connectivity, which allows internet access. So work that has been done just shows that connectivity in the region is associated with stronger economic growth, some research done by the IMF. So really our goal would be to try and eliminate the large differences in connectivity and internet access, mobile internet access across countries within the region, to enable the development of synergies and scaling effects in the region. And in this regard, I think new developments in sort of use of satellites for mobile connectivity could really help using scaled approaches to provide like universal access to developing regions such as the African continent. So there's some optimism in resolving that. Now on big fintechs, and their expansion, they are gaining a significant presence on the continent via platforms, various platforms like Facebook, and of course the M-Pesa now is expanding significantly. But I think going forward, they bring significant benefits. You know, they've created platforms that really reduce frictions or overcome the whole problem of high costs and frictions. But because of that big size, of course, there will be need to consider competition that will ensure that the platforms optimize benefits for the users over time, for the general public, and allow expansion of systems and the use of systems to grow, to facilitate growth in the economies. So for sub-Saharan Africa, of course, it will be good to be able to have systems which are interoperable, which talk and communicate with each other, whether it's retail electronic payment platforms or other platforms ready to optimize or to leverage off those interactions and use the scaling effects for business activities now. So essentially, it would be good for thinking to move towards designing a system that really tries to use the design to exploit the potential for developing regions with large young populations, you know, while inducing competition among big techs and platforms within those systems. So really, the goal in the end for the platforms is to develop or to facilitate, whether it's through regulation or through engagement with private actors, affordable, stable, and safe platforms. You know, to also explore other areas. One area where there could be work done to try to investigate expanding the reach of fintech would be really to explore the potential also of central bank digital currencies to use this in support of the SDGs as a force for good. So I'll leave it at that. Thank you.
Ita, thank you very much indeed. Super helpful. I'm sort of left tantalizingly wondering kind of where does the IMF fit into this? And I'm wondering, I'm just going to kind of push you for one more minute to perhaps just sort of go, where does the IMF fit into this conversation for those particularly who may not know? You're on mute.
Oh, apologies. No, I was saying that the IMF's mandate is really about safeguarding international monetary and financial stability. And as I indicated before, digital finance has significant implications now for monetary policy, for financial stability, financial sector, for just the future of money, essentially, in the global economy. And IMF has a central role here also in providing advice to countries on how to respond and how to facilitate, but also manage risks and help maintain financial stability. So, and of course, financial sector regulation of financial transactions. Thank you.
Fantastic. The added clarification that was needed. Thank you, Ita, very much indeed for taking the time. So we're going to move on next to a panel where we go sort of one level more detail in looking at these various issues. And before we do that, just two things. One is for those that are listening in, please feel free to put into the chat section on our wondrous Zoom any questions that you would like me as the moderator of the panel to perhaps pitch at one or other of the panelists over the roughly 35 minutes that we have. I can't promise to cover every single question, but certainly I will attempt to reflect them in my discussions. I'm just being told I shouldn't call it the chat section, but the Q&A section. And secondly, just before we begin the video, just before we begin the panel, we're going to show a small video that goes just a little bit further, really building on Achim's opening comments in giving us a little bit more of a perspective on this whole lens of people's money on the question of digital finance. So perhaps to my colleagues, if you could run that video now, that would be great.
We are at a fundamental crossroads. Digitalization can advance us more rapidly in achieving the Sustainable Development Goals, or it can deepen exclusion, divide us further, increase inequality. The choice is ours. For the first time, digital technology can put economic power into the hands of people, the people that own today's global financial resources. What if every citizen was empowered to make financial choices that support the SDGs and was able to ensure that every last dollar was spent on what really matters to them, family, community, their country, and the planet? Let's put citizens in the driving seat by enabling them to use their savings to finance their long-term development.
Increasingly, mobile platforms and data analytics are bringing sophisticated financial services to mass markets. Governments are digitalizing public finance, whilst a third of US public equity trades are now being carried out by computer-managed funds.
Digital technologies, which are revolutionizing financial markets, can be a game changer in reaching our shared objectives.
The UN Secretary General invited 17 global leaders from around the world in areas as diverse as financial regulation, policy, financial technology, financial institutions, and other experts to form a task force to consider how best to harness digitalization in advancing financing of these Sustainable Development Goals. Digitalization needs to enhance the alignment of finance with the SDGs rather than, for example, increasing short-termism or market concentration. Realizing these solutions, overcoming barriers and mitigating risks requires concerted actions by many different actors, by policymakers and financial regulators, by financial institutions in the markets themselves, including new fintech innovators, by development institutions operating at both the national level and the international level, as well as standards makers, experts, and civil society actors. Just as today's crisis has pushed us to take greater advantage of the digital world, so digitalization can help us to better align financing with the Sustainable Development Goals.
Fantastic, great. Thank you very much for that. And for those who didn't see the advert at the end of the 3-minute video, anyone who wants to look at the material that the task force has produced, please go and have a look at it at www.digitalfinancingtaskforce.org. With that, let me turn now to our next segment, which I think will be a very lively panel given our 3 participants. We have Marianne Ha, who's the CEO of the Green Digital Finance Alliance and has been an invaluable knowledge partner in the work of the Digital Finance Task Force over the 18 months of our activities. We have Natalie Jabungwe, the Chief Executive Officer of EcoCash, and who has been one of those 17 members of the Digital Finance Task Force, and without doubt a driver of both the energy and the insights that the task force has managed to arrive at. And then we have Lee Brenner, who's the Director of Global Public Policy at Facebook. Perhaps critically important to have in the room as part of the conversation we're having is really about what some of these different private sector actors are actually going to do going forward, both harnessing the upside and also mitigating the downside of the opportunity that digital brings in the financing space. So firstly, welcome very much to the panelists, and I'm going to kick straight in with some opening questions. Lee, if I might start with you, 2.7 billion users, I'm not sure if that's quite the right number, but I think it adds up to roughly China plus India. in some rather extraordinary way. Facebook not obviously thought about as a financial institution, but moving rapidly into financial services. Obviously harnessing digitalization at core, it's kind of core to everything that you do. Help us understand, kind of what it really delivers into the development space, and then maybe just touch on what some of the risks are that we, together with you, need to understand and address, and maybe even one or two of the measures that Facebook is taking to address some of those unintended consequences. Over to you, Lee.
Thank you, Simon. Yeah, it's great to be with everyone. So I will just start. I focus on some of our financial services work and our public policy. I've been focused on our Novi project, which is part of the Libra project for the last year and a half or so, 2 years. So that has obviously catalyzed quite a bit of conversation around the world on how technology companies and fintechs and companies like ours will participate in the financial services world. What we've done is obviously we look at the problem set of there being billions of people around the world that are underserved by the current financial services system, and we acknowledge that we think innovation and technology, and we've specifically looking at blockchain technology, has the potential to address some of these issues. Specifically on the project that I've really been working on, I think is a testament to the way we view things. We've been trying to engage with regulators and policymakers before, again, the project hasn't actually even launched. So we announced it over a year ago and started having conversations well before that with key stakeholders, because we knew that it was potentially a big idea, but also to make sure that we get it right, and that there are going to be implications for macroeconomic issues, for illicit activity issues and compliance issues, and regulators around the world who are exploring all of these different aspects, financial stability. We wanted to make sure that we were a good partner in making sure that the developments of regulatory frameworks take into account what we were thinking about doing, make sure that we took that feedback back in as we were in development of the project, and then making sure that the right kind of corporate governance was instituted, at least from this specific project on the Libra Association side, as that has become much more independent from the work that we are doing. So all that said, I think we see it as, we obviously have a huge platform, multiple platforms. We think we provide significant service to our users and people that use all the different various platforms that are already using. There's already commerce happening on the platform, right? And there are already ways that people are exchanging on the platform, but we think it's important that as people, almost 2 billion people around the world that are underserved, 1 billion of them have mobile technology. That is obviously increasing. We think it's important for people to be able to send their assets as easily as they can do to send a text message, right? And that's really been our guiding force in that. And we're making sure that we want to do it responsibly, that the areas in which we engage with both regulators and other private sector entities, that we're complementary in what we do, and that it is not being done in a way to displace anything, but really to make sure that it makes it better for both users and citizens around the world, which in the end, to your question, addresses the SDGs and the goals of all of these things. And I think I made a point in an earlier session that I think all the SDGs are obviously interconnected. So financial services, those things are related to the environment. They're related to small businesses and SME work, and how, the advancement of women and girls around the world, and making sure that those things are taken into account as we develop products and as we develop and go into markets around the world, both in developing nations as well. And making sure that as our products, and I'll finish with this, are obviously many times global in scale, that we're taking into account the perspectives and the insight and feedback from both small markets and large markets as well, to make sure that we're doing it in a responsible way.
And Lee, notwithstanding your role, kind of help us understand what the risks are. Yeah, which is not an assault on anything, but it's just helping us get our heads around. The way you describe this is a sort of pure upside play. Yeah, what are the things we've got to really watch for to make sure that that upside is realized without problems arising?
Yeah. Well, I think, from our perspective, we've seen, look, some of the feedback even from the beginning when we, at least, I'll again focus on Libra and Novi as an example, because I think the feedback is has touched on many of these things. So macroeconomic and macro stability concerns about replacement of currencies around the world, right? We don't think that's the case, but we think there should be the proper measures put into place and we've been, talking about how we can work with organizations like the IMF or UN or World Bank to create kind of protocols and programs. The Libra Association is doing a lot of this as well for developing economies, to say, how do we put in capital controls and those types of things to address these new types of technologies. We've worked on compliance measures for illicit activity on these new systems to make sure that as regulators and people that look into this and are looking into these new systems are aware of the way we're developing things, we're helping to innovate in that space too, and make sure that the regulatory frameworks that are being developed are done in a way that both create guidelines, because we are, along I think with most of the industry, are very interested in actually having clear guidelines, but then also make sure that it doesn't kind of force down innovation or stop innovation, right? So I think that's where an area where we think we've been helpful. But I think there are definitely risks with any project, but we think if it's done responsibly, and especially if it's done collaboratively with regulators, we think there is much more potential for upside than downside.
Fantastically, and the fact that you're here, I think, is obviously a signal of that collaborative space working well. So thank you very much. And I'll come back obviously in a couple of minutes and perhaps kind of take another layer. But let me turn now to Natalie, if I may. Natalie, you've been a star over the last 18 months in helping to drive the task force forward, but your day job is in Zimbabwe doing other stuff. You're the CEO of EcoCash, the largest and really main digital payments platform in Zimbabwe, but you've somehow managed to take that beyond, if you like, the sort of classical financial inclusion agenda, and you're beginning to layer other innovations on. And it would be great if you could just kind of walk us through a little bit, kind of what you're doing and how great you see the potential of the space that you're working in.
Great, thanks very much indeed, Simon. It's an absolute pleasure to be here. Maybe let me just start by a short background. I think one of the best things that's happened to least developed countries and developing countries is that infrastructure development is really starting to disrupt traditionally prohibitive consumer offerings, and largely in the financial services sector. And so for us in Zimbabwe, the investment into telecommunications of 2 decades ago has really started to reap fruit in terms of the ability for us to design overlay services. And so for us, we're a 9-year-old company that started offering mobile money in a country where there was only 10% financial inclusion. And today we account for 90% financial inclusion, and we have 11 million mobile money accounts in a country where over 11 banks have cumulatively 3.5 million bank accounts. In a sense, you could really say what mobile technology has enabled us to do is financially include people in a way that banks that were present here as far as 100 years ago were not able to do. Technology enabled us to do that in less than 10 years. We've seen great transition from financial inclusion to sort of enhanced financial services. And this is part of what the Digital Financing Task Force report really illustrated. We've really started to see that there is a trend towards platforms managing end-to-end financial services themselves, and sometimes supporting and sometimes exploiting really underserved value chains and supply chains. So from just transfer money services such as peer-to-peer, which were predominantly served by cash in, cash out of agents, our platform has been able to connect banks. Our platforms are now offering a payment rail for e-commerce. Our platforms even moved into mobility and logistics. And so you really start to have the emergence there, Simon, of BigFintech in a sense. And what's been exciting about this BigFintech in a sense, especially for us here on the African continent, is that it is really starting to touch the lens, the financial transacting lens of small to medium enterprises that make up at least 65% of the driving economy and the force of the African continent. And so aspects such as lending have really come to the fore. We are starting to look at how we can use data to enable that we can offer better value creation, we can offer more affordable services, and to see how much more value actually we could deliver to SMEs through financing. Akim Steiner mentioned how really difficult it could be to get access to financing, particularly in the capital markets, just by way of geographic stratification. And then we have been using our data to tier up with local stock exchange here in Zimbabwe to see how we can classify eligibility for credit lending and capital market financing through our mobile money data, pulling it through into the first only digital stock exchange in Africa that allows SMEs that were cut off from traditional banks to actually get eligibility. So that's some of what we're working on, and it's quite groundbreaking. But it's fun to see the convergence, but obviously that comes with the challenges that Lee Brenner talked about. There becomes almost a overlay and morphing into regulation, and that is going to be one of the key challenges, I think, in the next 3 to 5 years for regulators to grapple with when it comes to big fintechs. Thank you.
Natalie, thanks. A little bit like Achim, you say things so quickly that people don't realize the revolutionary nature of what you've actually just said. Correct me if I'm wrong, but in 10 years' time, we're going to be saying Zimbabwe was the world first place to use digital payments data to drive due diligence and credit rating and eligibility of potential fast growth companies to be listed on a stock exchange. Have I got that right?
Absolutely, yes.
Absolutely. Well, you heard it here, folks. 10 years on, we'll be following Zimbabwe. Let's not forget that message. I'll come back to that in a second, if I may. Let me turn then to our third panelist, Marianne Harm. Marianne, you have run a complex global public-private partnership focused on this topic now for longer than most of us have been talking about this subject. And you've been a fantastic knowledge partner to the task force. We'd love to get your take, perhaps stepping back from the specific examples of kind of what is the state of this beyond the conversation, kind of how much really is going on out there. And I know that the Alliance has developed a tool to kind of measure kind of how aligned fintech innovations at a national level are with SDGs and national priorities. Please kind of help us understand it a bit.
Well, thank you, Simon. And it's definitely been a very exciting ride to work with the task force. So as Simon said, we've developed this tool, so we have a really good understanding of where does the market actually sit today? Because there's a lot of discussion about what's the potentials and what's the risks, but where are we? I mean, if we zoom into Zimbabwe, Germany, Kenya, how many of the fintechs are actually delivering new financing on the SDGs? And that's what we've been out mapping with this tool. And what we found is that it's in the lower end. So if you look at the total number of fintechs in a country, what bigger percentage are actually born to deliver financing for the SDGs? It varies from jurisdiction to jurisdiction, but it's in the lower end. So it's between 1% to 5% are really born to deliver that. Then what we see is exactly the conversation we're having today, that more and more of those fintechs or large platforms that were not born with this end in mind are starting to build in green or SDG functionalities. And then you have the scaling part. So what they're essentially doing is that they are going in and correcting the current market failures created by the failure in the governance system of global finance. So for instance, the Ant Forest application, which is correcting that our global governance system create finance that doesn't account for green externalities. So it's almost free to pollute, right? So they're just building into a massive platform, the Alipay, a piece of software where you get as a user your automated carbon footprint, and where you can then it's gamified, and you can get rewarded for reducing your carbon footprint. So they go in and correct these market failures, which we also see with Libra. And then you have a number of, so that's on the market innovation side. Then we're actually seeing quite a number of also quite innovative central bankers, as we have seen with Patrick, who will speak later, who have gone in and said exactly what Achim Steiner talked about in the beginning. What are the digital tools that we can use to circumvent these bad credit ratings and these high cost of capital? So we saw the Emakiba, which was basically offering government securities to citizens, which was to incentivize higher savings ratings, savings culture in Kenya. We're seeing that being replicated efficiently because of DLT technology. So we saw the Central Bank of Thailand, they issued a citizen savings bond. We saw Indonesia also this year issuing a green retail sukuk. So we've seen actually innovation not only at the market level, but also at the sovereign level, which is quite exciting. But of course, it also, as we talked about, introduces these new types of risks in the system. And if we look at our tool through that lens, then we measure on 3 levels. And that is some of the thinking that we think are important after having been in dialogue with a lot of regulators and market innovators, that maybe we need to start to rethink governance of the financial system, because now it's a digital financial system that takes more of, look at it a bit like a digital stack in the digital space, where you have the rules as one layer, then you have the digital infrastructure with the protocols as one layer, and then you have another layer, which is how are the applications designed. And if we look at it through that lens, then we can also come with a number of insights I'd love to share with you.
So Marianne, 2 things. One is I want to give you a 15-second pitch. Go to this website and look at this amazing tool that we've developed, just so that people don't miss that. But secondly, I have a question from Thomas Pushman, which is, this is all incremental. Kind of, what are we talking about here? You talk about scale, but are we really getting to scale? Or are we still fiddling around in the corner, while Rome burns? So perhaps you might kind of come back to that kind of, we talk about scale so easily, but is this just words or is this deeds?
I think we have to look at the world when we look at sustainable digital finance and scale. It's moving in very different speeds. So take the flight to Hangzhou and you stand in the future and you have immediate scale. Go to Europe, where it's much more structured by incumbents, and yes, we do not have scale. But if you go to Hangzhou, you have 550 million people that are participating on their mobile wallet in this informal carbon market, offsetting their behaviors using green tokens. So we do have scales in some parts of the world, but really to scale, and I think the Libra story is a very good example of that, we need to rethink how we do governance, because currently there are too many jurisdictions where you move into a non-regulated space if you try to do a stable coin or another type of innovative financial instrument that could help for the SDGs.
Brilliant, Marianne, thank you. And actually you give me the perfect segue to go back to Lee. Lee, I want to put you on the spot and ask you not to talk about policy and regulation, but nevertheless to talk about governance. So I have a question from Catherine Forrester, but also from others, that sort of says, okay, we get there's a policy and regulatory agenda, but what about corporate governance? what about self-regulatory models? What about the ethos and values of an organization? These very, very large platforms are going to be hard to regulate. You know that, I know that, we all know that for multiple reasons. So we're going to depend a lot on how these platforms are governed, and how the values that drive these platforms really evolve over time. Kind of help us out on kind of, I don't know, just the upside of the approach that Facebook is taking, the challenges that maybe they're really helpful to hear from you.
Sure. I mean, I would say as one example, well, let me first start by saying, like, I don't speak on behalf of Libra, and obviously Libra has been in development of its own corporate governance over the past year as well. Within Facebook, obviously, there are plenty of challenges that many of us know about as we've grown and in all different areas. But I think that the company itself is really focusing on building the right governance, and as these challenges arise around the world, right? These to Marianne's point, it's, with scale, there are a huge number of other issues that come up and challenges that come up, but we've, as a company, invested huge amounts of money and people and resources to make sure that we're developing the right ability to address these concerns that we're seeing with on the platform. So I think there are there's responsibility on the side of companies like Facebook that we've taken seriously, and we take these issues seriously. And I think as we're entering into the financial services space, in addition to dealing with other issues in other areas, we're taking them very seriously, so that we try to build out that corporate governance and build up, whether it's from compliance issues or anything else, that we are in a position so that when it does get to scale, that we're in a better position to be able to handle any of the issues that do come up.
And Lee, can I push you one step further? And you'll close me down when you've had enough, I know that. Which is, if you look at what happened to Reuters many years ago when it was listed, they were forced by the UK and US government to take on the so-called trust principle, which was a sort of golden share public interest corporate governance innovation to kind of combine into a commercial governance model. Now, I'm not asking you to commit Facebook to doing the same thing, needless to say, but do you think there is space, to innovate in the corporate governance area, given the scale of digital finance platforms that are likely to emerge?
I would say that I think we are taking the issues seriously, and I think we're very open to working with regulators and policymakers to get feedback on our governance system, as well as the way, be transparent on what we are actually doing, so that there is visibility into it, right? But I think we're very open to those conversations, and I think teams around the world with Facebook are interacting with not just on global finance issues, but on issues around the world, to make sure that there is that transparency and that we're doing things, and to use the line that we use, and which is truthful, and really our mission is to try to get it right? And it is we're constantly striving to make sure that we're getting it right.
Got it. Lee, thank you very much indeed. Nat, I'd like to come back to you, if I may. Sometimes I get a sort of feeling that there's a discussion about international stuff, and then sort of Africa having to cope. But of course, with the launch of this dialogue on global digital finance, which also Patrick and Njoroge will come back to, there's also the possibility of the African continent innovating into the international space, kind of going the other way around. And I'd be keen to kind of hear from you, kind of, should Africa have its own digital currency, or should, how does one as a continent or at parts of the continent really innovate in order to really manage the way in which international incoming initiatives are beginning to influence your domestic economies?
Great. Thanks, Simon, for that question. I think without a doubt, there's going to come a point where big fintech in Africa is going to have to standardize. We have seen that already with the evolvement of traditional financial services in more developed countries. It is inevitable. It will come to that. We have seen those standards in global telecommunications, which is overarching infrastructure globally and as well as on the African continent. And if you look at the way that payments happen today already in traditional banking, the likes of Visa and MasterCard on their interoperability standard have already paved way for that and already include Africa de facto onto the global space. What's going to be quite interesting is how big fintechs, for example, tier up on value propositions like Libra, because they give a quicker and sort of less restrictive way of getting Africa financial services quicker and hopefully on a more scaled way, but looking at also disruptive KYC, security, that looks into things like biometric, artificial intelligence to ensure that governance becomes the center point and to eliminate any risks, particularly when you look at AML, things like terrorism financing that the world really cares about, because scale comes with its own risks that have to be mitigated against. But you've only got to look at international digital remittances that have already taken scale. If you look at remittance trade between Nigeria and the rest of the world, it's sitting at about 21 billion per annum. When we launched our EcoCash, within a space of 2 years, we commanded about 30% of the international remittances share already, just because of scale. And what enabled that was obviously our ability to partner with traditionally offering financial services and create an interoperable model with companies like WorldRemit, Western Union, MoneyGram. So it's going to be a game of partnerships. And what gives us great hope right now is the launch of the Africa Free Continental Trade Agreement that is really looking at how Africa can trade together, looking at rules of origin, but most importantly, the role that financial services will play and what will enable payments, because it's not just about the interchange of goods. It is really about, so how does the payment mechanism work? And so at the AFCFTA, they're already starting to think about a unified platform that could come to the fore. And maybe Governor Njorege at some point can bring that into this dialogue on how the Africa Free Continental Trade Agreement unified payments platform can then interact with the rest of the world. I currently sit on an advisory board for COMESA, the trading body region, which makes up South Africa, which is greatly the RAND Union, Namibia, Zimbabwe, Zambia, Malawi, and a few other countries. And we're thinking about building an interoperable transacting platform.
So I have one more question before I go on to Marianne, and it's my perhaps feeble attempt to interpret one or two of the questions that have come through on the text line. So it's one thing promoting fintech. It's one thing promoting fintech in developing countries, but it is another level to try and ensure that the way one promotes fintech aligns effectively with the SDGs. Yeah. What does one got to do to kind of get to that third level? Kind of how does one ensure that regulators are not just pushing fintech or constraining fintech or managing risks, but are really pushing it into the agenda of financing the SDGs? Kind of what would one do in a Zim context, or what would one do in a continental context to try and edge that forward?
I think it's balancing. It's a hard one to balance, Simon, because most private sector firms have largely been driven by profit. But to the point of our report, people's money. And this is what we really want to draw to the world and to say, at the end of the day, when you're looking at fintech, you want to put the consumer at the center. You want to make sure that you do good by doing well. in as much as at the end of the day, it has to be sustainable in terms of how you deliver your business model. Actually, first and foremost, people are the world's first financiers. They're the taxpayers. They're the one that typically finance through getting credit. They're the ones that have to pay the interest. And if you look at pension funds and a variety of other instruments that we could bring together. And when private sector, when actors start to think about the value that they must deliver back to the first financiers, then I think we can really start looking at impact. And that you can really see by the way of introduction of the ESG, that is really now at the forefront of some of the biggest banks globally, but also we're really starting to see organizations like UNDP create public-private partnerships that are really at the center of focusing private sector players into what is the right thing to do for consumers while running a sustainable business model. And I think it is evolving and changing in a really big way. And it's putting people first, consumers first. That brings that impact.
Natalie, thank you very much. And actually, once again, you provided a wonderful bridge across to the question I was going to ask Marianne. So Marianne, several people in the sort of chat Q&A area are asking about sort of public-private partnerships. Do they have a role to play? And what I absolutely know is that they don't want anybody to go, public-private partnerships are a really good idea, you know, because that's like saying breathing is a really good idea. But you run a public-private partnership and you're out there forming alliances in multiple domains, because you're not Facebook with 2.7 billion, whatever it happens to be. Yeah, you're having to construct all sorts of new ecosystems. Help us understand, yeah, how can those sorts of partnership, coalition formation processes drive fintech development towards financing the SDG agenda? And help us understand, really, is that a key to the answer, or is that just a kind of a side game? You're on mute.
I think they have a huge role to play, a really key role to play. So if we look at how the internet evolved and the governance that enabled all of us to just be freely on the internet, we don't have to ask regulators to do a radio show or anything, we just go ahead and do it. And if we want to transfer the same type of sort of more free governance into the financial system that still offers value, then we have to look at what happened there. And I think what Natalie said was really important, and I want to sort of draw on that again, because the public sector and regulation can go so far. We need regulatory clarity, etc. But we also need standardization. And what we saw happened in the era of the internet, and why the governance has evolved to work for the public good also, is because we had the industry play a really important role. In standardizing it. So I think in that sense, definitely, but also more sort of on the ground, doing public-private partnerships in terms of what we have seen with most of the experimental approaches, the type of sandbox approaches, etc., have played an extremely important role, but also that the public sector becomes part of the experimenter, like we talked about before, with the government securities for citizens, really working with the private sector and the financial service sector to trial some of these solutions. And what we have seen has really enabled some of the scaling in China, we talked about scale before, was some of the supportive environment and the collaboration with some of these platforms from the public sector. So for instance, just offering the land to plant the trees, being incentivizing through lower tax rates, etc., for some of these platforms that are really into the green agenda to be able to travel that route. So public-private partnerships also in terms of trying to de-risk some of the investments into to these types of technologies, because there is a lot of perceived risk, and there is still a lot of trial and error that needs to happen, where the private sector or the public sector can go in and play an extremely important role.
Marianne, that was such a great answer to a difficult question that I'm going to just ask you another difficult question. I hope that's okay, to sort of keep you going just for a minute. I know that GDFA and you and your colleagues in many organizations have been working on varying innovations in the tokenization or digital currency space and trying to figure how to embed green and other issues into the tokenization architecture itself. A lot of people have showed interest in this work, but it seems very marginal. And I guess the question, and Lee, you may want to comment on this, it's kind of your call. You know, if we're casting forward a number of years, are we in a world of thousands of different non-Westphalian currencies, so non-sovereign currencies, expressing many different values to many different sub-communities, or has digitalization driven a monopolization model through endless economies of scale, and we're down to a tiny number of currencies, you know, basically dominating the way we manage international transactions? I'd love to get kind of your take, because I keep hearing sort of two completely different visions of the world, both driving out of the digital finance space.
Well, I think if we fast forward, we are going to see the vision of a number of currencies, and it's going to be those currencies that offer the clearest value proposition. Today, the value proposition of offering to send money across borders instantly and with no fees is a real value proposition. It's something banks haven't cracked, and even though central banks are trying to do wholesale central bank digital currencies, it's taking too long. So I think that's definitely one value proposition, and we're going to see that also going forward in some sort of colored coin or private, but of course regulated coin. Then I think exactly a number of these types of behavioral coins are going to emerge, and some of them can be in collaborations with central banks. So they can be backed by central bank money, or they can be just in community. But we're definitely, and that's what we see with the incentives for the economy that's green or social.
Brilliant. Marianne, thank you very much. So we're coming to the end of the panel. I want to give Lee and Natalie a kind of a last word, if I may. Lee, it's kind of freestyle. You might want to address the same question that I raised with Marianne, or simply, what can we do to kind of nudge more quickly the digital finance agenda into an alignment with the SDGs? Maybe that's a kind of frame question you might address, and also kind of Natalie, not the long list, but kind of what would be your big bet?
Absolutely. So I think what I would agree with what Marianne said 100%. I mean, I think there's going to be both competition, of which I think we think is a good thing, but I think there's, central bank digital currencies are going to come into fruition, maybe not immediately, and some will be wholesale, or maybe most will be wholesale. I think central banks will have to determine if they actually want to do retail CBDCs. But I think, to Marianne's point, I think there will be a lot of quite a bit of collaboration. I know the Libra Association has interacted with many central banks to discuss that. As we're building our wallet, obviously we're focused on the Novi wallet, focused on Libra digital currencies, which are, the plan is to have them backed one-to-one with central bank digital, our fiat currencies. So there will be a requirement to have traditional fiat currencies for this to exist. But we think there's going to be many other options there. And I think, to Marianne's point, in the end, it's going to come down to the value that they provide to people around the world, right? And as long as there is that value, that's the key. And the life of we're living in. There's another office mate who happens to be my wife, so I apologize in the background. But I think the key there is to make sure that to answer your other question, is to make sure that we are collaborating with policymakers and regulators as they are developing these frameworks, but that, you know, as these institutions are thinking through the standards and regulatory frameworks, that they're done in a way to recognize that, you know, innovation isn't going to stop, right? There sometimes are calls for that, but we think that's not useful, that it really should be, to Marianne's point, in a collaborative effort, and see where there are ways that we can work together and ways that to make sure that there's clear guidelines for the private sector. And that's really what our interest is, to make sure that there's clarity as well as collaboration.
Lee, fantastic, thank you. Natalie, you have the last word on the panel. A kind of a wish list of one, really, where you think, given all of your work in Zimbabwe, your engagements around the world, and obviously your place and contribution to the task force, kind of where would you place your big bet in aligning the emergence of digital finance with the SDG agenda?
Well, I think it will be in digital finance innovation, disrupting capital markets. We have already seen the complexities, particularly during this COVID-19, where for the most part, a lot of governments had to really unlock resources internally. And when you're faced with massive crisis and pandemic, it's very difficult for the rest of the world to sort of come together and support each other efficiently. But I think there's a real opportunity there, particularly in digital mobile financial services, drawing out in scale and leveraging into the domestic resources that are available in various geographies, nations, and actually making sure that economies still pump and making sure that people are still served, and that wealth creation continues to be something that can be provided to people first. And people, quite frankly, want great return on their money if they're going to finance governments. Governments and private sector are going to have to find ways of delivering back that value. And so I think that's one to watch. And Kenya has already done a good job of it. Governor Njoroge always talks about the Makiba bond that was launched in Kenya, and that pooling of resources to actually deliver back value without going on to the international global markets to raise financing. So I think it would be great, really watch the space in that.
Natalie, Marianne, Lee, one of the saddest things about online is a lack of applause. Yeah, but I can certainly tell you that I am convinced that were applause available, thank you, Achim, the many people that have been listening, or if not riveted to the comments that you've been made, would be applauding at this point. So much appreciated, a very dynamic, very interesting, very insightful panel. With that, and with great pleasure, I'd like to pass over to Patrick Njoroge, the Governor of the Central Bank of Kenya. Patrick has been a fantastic advocate and insight provider as a member of the task force, is a co-chair of the Dialogue on Global Digital Finance, and in his day job, he does a bit of governing and central banking as well in Kenya. With that, Patrick, let me pass over to you.
Thank you very much, Simon. Thank you, all of you, participants, excellencies, ladies and gentlemen. I really enjoyed listening in and in effect participating in this, I think, remarkable discussion. And first, of course, Achim Steiner, thank you very much for your excellent presentation. And I would also add that you should vicariously take some, let's say, well, congratulations. We've been told you cannot have applause, but our congratulations to the UN family. Today, the World Food Program did win the Nobel Prize, and we look forward to a different time when maybe the institutions that you are representing, maybe even the task force, will one day win the Nobel, well, it wasn't Nobel, it was actually the prize, the Peace Prize. I'm sorry, I got confused there. I also want to thank the Swiss government for hosting the Geneva launch of the report of the task force, and in particular, Ambassador Christian Pflüger for his excellent remarks at the beginning. The most fundamental message of the report, as was outlined before, is placing people at the center of the global financial system. The urgency of a people-centric approach has been amplified by the coronavirus pandemic. And just this week, the World Bank has released new estimates that due to the pandemic, between 800 and 115 million more people will be pushed into extreme poverty in 2020, setting back poverty reduction by around 3 years. So we are losing the battle, the SDG battle. Digitalization has been a great enabler of lives and livelihoods during the pandemic, but it also comes with risks, primarily on cybersecurity, data privacy, and market concentration by big techs. So where do we go from here? I really enjoyed the discussion in the panel, and definitely want to thank the panelists, Lee, Marianne, and Natalie. The dialogue of global digital finance governance, which I am honored to co-chair with Akim Steiner, is raising our collective ambition and is concerned with the critical issue of big techs and their broader effects on sustainable development, particularly in developing nations. How we understand these impacts and relate the trade-offs and how we mitigate negative impacts while maximizing positive effects is essential to securing longer-term development outcomes. And that is why today's conversation is so important and crucial, perhaps the most important of the decade. As big fintechs integrate vertically and expand horizontally across sectors from core business and across geographies from home markets, their potential effects on sustainable development can only be expected to increase. And examples of this abound, e-commerce companies also involved in financing, infrastructure and other businesses, expanding across geographies through acquisitions, heavily relying on data and AI, and with ever-growing supply chains which themselves have their own impact. We in developing countries have an unprecedented opportunity to leapfrog towards sustainable development. We have done it with mobile payments, and we now need to do it with a much more complex set of players, big fintechs, and a broader range of impacts. I wanted to give 2 points really, or 2 thoughts that that struck me in the context of the conversation, and maybe even answer a few questions that were raised. From our perspective, the way we look at big fintechs is that our objective is to democratize financial services. That is really the objective that we are engaged in. But at the same time, you do have, and we need the technologies, the innovations, etc. So the first question we ask ourselves is, what solutions are we resolving? What solutions in terms of the people? Again, making it people-centric. So technologies for their own sake doesn't quite get home base in a sense. And in some sense, we need to answer that question. And frankly, this is the issue we have with the discussion about digital currencies. If you look at digital currencies, the concern for them are really more of societies and people that are higher up the pyramid of financial needs. Now, most of our people, particularly when you're thinking of SDGs, you're really talking closer to the bottom of the hierarchy of financial needs. So that is really how we structure the questions that we have or that we raise in terms of figuring out what are the concerns, what are the solutions, etc. Secondly, a key principle for business decisions is that there is a predictable environment, regulatory environment, etc., looking forward. And I think Lee mentioned that point in various ways. But the point is that with the possibilities that are ahead of us, we cannot see far enough to make things completely predictable. And that is why, from our perspective, we think that it should be more a principle-based approach. So, and that way the known unknowns will be dealt with, and even the unknown unknowns. So, we have limited say over the governing arrangements that we mentioned a moment ago. And the governance framework say for an e-commerce platform in the US or in China is responsive to and does not capture all the effects that this platform might have on SMEs in Kenya, which are part of their supply chain. So in order to get where we want to go, we'll need to bring together a wide set of actors to discuss these issues and advance governing arrangements. And today's first high-level roundtable, which happened earlier in the day, is a significant step in the right direction. We should also seek tangible outcomes, things that move the needle and can nudge us in the right direction. We also need to engage big fintechs. This is not about regulating big fintechs. It is about working with them, advancing governance innovations that are helpful frameworks for them too, and more importantly, for all people. It is essential that big fintechs participate in this dialogue, and I'm encouraged again that a few have joined us here today. So today is a milestone event in further aligning fintechs with sustainable development. This is something that many developing countries are already engaged with, but which also concerns us all. The panel discussion highlighted possibilities. This very event opens new perspectives and pathways to act upon these discussions and take them forward and ensure that fintech and big fintech serve the greater good. The choice is ours, and I'm extremely pleased to take this forward with all of you. Thank you very much, and thank you for organizing such an impressive event.
Governor Njoroge, Patrick, thank you very much for those comments. I think it's really helpful to sort of bring the energy from the panel and to sort of compress it into your remarks on the directions we need to go. And I think this dialogue on global digital finance, how do we govern big fintech going forward, is not the only piece of the puzzle, but it is certainly a very significant piece of the puzzle. And I'm sure we would all join each other in being very happy that you and Achim are taking this work forward as a sort of spin out or continuity from the task force. Ladies and gentlemen, I have the sort of graveyard spot honor to bring the session to a close. So bear with me for a couple of minutes and then our Friday evenings and weekends beckon, I'm sure. So firstly, thank you very much to all the keynotes and the panelists. I thought really of the many Zoom calls that we're all on a fairly continuous basis these days, I found this session extremely stimulating and very insightful, and really builds on some of the leading edge practices and some of the dilemmas we face in trying to ensure those leading edge practices go to the right place. I wanted to thank in particular the Swiss, who are not only co-hosting this particular event, but are supporting and very actively involved in the dialogue on global digital finance. I think a really suitable role for them to take, given, as Jovan said, the central role that Switzerland is seeking to develop in the broader governance of digital finance, you know, to support this broader dialogue as to how to make that governance more inclusive and more sensitized to broader sustainable development goals. And it would be bad of me not also to thank the governments of Germany and Italy for more broadly supporting the work of the task force over the last 18 months. One more round of thanks, and then on to perhaps less important things, which is, as well as not being able to applaud on Zoom calls, it's very hard to hand flowers to people who've actually made events work, although I'm sure we could figure out some digital way to do that if we really set our hearts to it. I'd really like to thank Ayaz, who's taken the work forward in the dialogue on global digital finance, and the core team of the task force, Sarah, Dugu, all people that you can't see but have actually made this conversation work, Eva and others. So thank you all very much for making this work. A couple of key things that I would take out, really from what I've heard people said. Governor Njoroge, you said, my aim is to democratize finance. I'm not sure whether that's in your job description as governor of the Central Bank of Kenya, but it feels to me like it's a much better job description that many others should also take up. And I do think that the task force has really focused on that agenda. Not easy, but by no means impossible. We're at a moment in time where digital could go one way or it could go the other way. And we have the opportunity of, as you have written extensively, Patrick, of really saying it's our choice. We can choose really whether digital takes us up the high road or really kind of turns into a risk and a problem or simply more of the same going forward. I would encourage those of you who have the bandwidth to have a look at the task force report. If you don't want to wade yourself through some of the lengthy analytic work, certainly the last section touches on the action agenda, which is really what we focused on today here. Large-scale, multi-trillion-dollar market opportunities for harnessing digitalization in advancing financing of the SDGs. So we didn't start with a governance problem. We started with the opportunities that are out there. Important insights into what needs to happen at the national level, developing those digital ecosystems aligned to the SDGs that Marianne has taken it upon herself and the GDFA to measure along with others. And then also trying to grapple with this broader international governance challenge, which clearly needs innovation, not only inclusivity. It needs a combination of different kinds of regulators, different approaches to policy, perhaps insights at the corporate governance level, the values and ethos of the platforms that are going to emerge over the coming years. All a lot of work to be done. Ladies and gentlemen, thank you all very much indeed for attending this session. Thanks once again to the keynotes and the panelists, and I wish you all a very good and safe evening and weekend.